March 4, 2025, has become a day that will be forever etched in financial history as President Trump's signature on new trade restrictions unleashed chaos across global financial markets. The immediate aftermath saw $3.4 trillion in market value vanish within minutes of the opening bell. The destruction of wealth was swift. The S&P 500 plummeted 2% in seconds, while the Dow Jones Industrial Average crashed 800 points, marking one of its worst single-day performances. The NASDAQ composite entered correction territory, dropping 10% from its December peak. Real people, retirement accounts, pension funds, and small investors are watching their life savings evaporate in real time. The panic on trading floors has reached levels not seen since the 2024 December crisis, with the VIX Fear Index soaring. Veteran traders are describing scenes reminiscent of the 2008 financial crisis, with institutional investors desperately trying to offload positions as confidence crumbles. The post-election rally that Trump supporters celebrated has transformed into a nightmare scenario. What makes this situation alarming is the speed of the decline. Unlike previous corrections that developed over days or weeks, this meltdown occurred within hours of the announcement. The optimism that fueled one of history's longest bull markets has evaporated, replaced by uncertainty and dread. Market analysts are scrambling to assess the long-term implications of these trade restrictions. But one thing is clear: the global economic landscape is shifting beneath our feet, and the aftershocks of today's events will likely reverberate for years to come. As we continue to monitor this developing situation, stay tuned for updates on this unprecedented market crisis. This is just the first chapter in what appears to be a fundamental reshaping of the global economic order. Good evening, viewers. The financial earthquake that struck Wall Street following Trump's aggressive trade policies has left no stone unturned, with America's most prominent companies taking devastating hits. I'm John Davidson, bringing you the latest developments. What's particularly alarming is how this market meltdown is affecting not just risky ventures, but America's corporate giants, companies once thought bulletproof. NVIDIA, our AI powerhouse, watched its stock crater as tensions with China reached new heights. Alphabet, Google's parent company, couldn't stop the bleeding as regulatory fears mounted. Amazon, the symbol of American innovation and global commerce, is now looking vulnerable as international trade relationships crumble. And Tesla? Elon Musk's electric vehicle giant has seen a shocking 45% value drop from its late 2024 peak. The warning signs were there. For months, economic experts and Trump's own team members raised red flags about these policies. But on March 4, 2025, the administration pushed forward anyway, implementing what many call the most aggressive tariff policy in modern American history. Let's break down these numbers. 25% tariffs on Mexican imports, another 25% on Canadian goods, and a 10% levy on Canadian energy exports. Our northern neighbors are feeling the heat, with no industry left untouched. Then there's China. The existing 10% tariff doubled to 20%. Escalating a trade war that's been brewing for years. Wall Street had convinced itself that Trump would never risk the economic stability that helped secure his second term. They bet wrong. Now, as markets reel and investors scramble, ordinary Americans are bracing for what could be just the beginning of a prolonged economic crisis. Remember to subscribe to our channel for continued coverage of this developing situation. We'll be right back with more analysis after this break. Like, share, and subscribe for more updates on this unfolding economic story. Breaking news: North American trade war erupts as Canada launches economic counterattack. In a dramatic escalation, Prime Minister Justin Trudeau has unveiled Canada's most aggressive economic response following President Trump's controversial tariff announcement on March 4, 2025. The implementation of a 25% tariff on $100 billion worth of U.S. goods marks the beginning of what experts call the North American trade war. This isn't merely about economics anymore, declared Trudeau. When President Trump suggests Canada should become the 51st state, he fundamentally misunderstands who we are as a sovereign nation. Canada's response was swift. Within hours, they implemented a 25% export tax on electricity flowing to 1.5 million American homes across Minnesota, Michigan, and New York, threatening to terminate electricity exports if the situation worsens. Canada also announced a nickel embargo, choosing to stockpile this crucial metal rather than sell it to U.S. manufacturers, threatening American military equipment production and battery manufacturing. Meanwhile, Mexican officials are preparing a devastating counterattack targeting America's agricultural sector. Mexico, the largest purchaser of U.S. corn, soybeans, and pork, plans to implement punishing tariffs on American farmers. Trump defended his initial tariffs as a national security measure, citing drug trafficking concerns. However, critics argue this masks a purely economic agenda that's already backfiring. The damage to supply chains threatens to cascade through the North American economy. Small businesses dependent on imports are bracing for impact, while manufacturers face rising raw material costs. With Canada preparing an additional $125 billion in tariffs to deploy in 3 weeks, and Mexico's retaliation looming, experts warn this could mark the beginning of a prolonged economic conflict affecting American consumers directly. Provincial leaders across Canada have pledged to support federal measures and escalate their response if necessary, suggesting this conflict could expand to regional economic warfare. In a shocking turn of events, the economic fallout from Trump's trade war has hit America's heartland and automotive sector hard. The impact on U.S. farmers was severe, while the auto industry faced major disruption. Mexico's integration into American automotive supply chains created vulnerability. As Mexico prepared retaliatory tariffs, automakers scrambled for alternatives in a strained market. China's response to Trump's 20% tariff hike targeted America's technological weakness. Beijing threatened to restrict semiconductor markets, endangering companies like Intel and AMD. China's control of 80% of global rare earth minerals posed a serious threat. This dominance over materials essential for electronics and military equipment exposed a critical U.S. vulnerability. The market crash erased trillions in value. Major corporations issued profit warnings, with GM and Ford projecting huge losses. The housing sector faced challenges as Canadian lumber tariffs threatened to increase construction costs. Geopolitically, America's position as global trade hub weakened. Canada strengthened European ties, Mexico turned to South America, and China expanded its Belt and Road Initiative in Africa and the Middle East. The trade war reshaped global economic alliances. As supply chains reorganized and partnerships dissolved, concerns grew about long-term changes to the global economic order. American companies faced higher costs, disrupted supplies, and shrinking international markets. While markets could recover and tariffs adjust, damage to America's global economic leadership and allied trust threatened to persist. What began as a bold economic move became a strategic miscalculation that could weaken American influence for decades. The immediate market shock was significant, but the long-term implications for American economic power and global leadership were potentially more severe. Breaking news: global economic tremors as Trump signals trade relief. In a dramatic turn, White House sources reveal President Trump may consider relief for America's closest trading partners, Canada and Mexico, though Washington veterans remain skeptical. This comes as markets face what analysts call the March meltdown. Wall Street insiders describe America's declining economic influence. "We're witnessing something unprecedented," says former Treasury advisor James McKinnon. Nations aren't just discussing alternatives to the US dollar, they're implementing them. The effects are spreading rapidly. Allies are moving away from US-centric trade systems, forming new partnerships that exclude American involvement. What began as a cautious response has become an economic exodus. Financial institutions report countries diversifying from the dollar. The global financial system is restructuring itself, and the US risks being left behind, notes strategist Patricia Chen. Questions persist about Trump's intentions regarding the trade relief. Is this a genuine attempt to stabilize markets or political theater for nervous investors? The stakes are enormous. With trillions lost from global markets and major corporations still struggling, time for meaningful intervention may be running out. We're past simple fixes, warns economist Robert Freeman. The damage to international trust could take decades to repair. This could mark a pivotal moment in U.S. economic history. Will Trump change course before permanent damage occurs? The next few weeks could determine America's economic future. Stay tuned for updates on this developing story. Share your thoughts on how this might affect your financial future. Subscribe for more analysis of global economic trends and political developments. Remember to enable notifications to stay informed as this situation unfolds. Your support helps us deliver important stories. This has been your update on America's trade crisis. Keep watching for the news that matters.